Let's address earnings. Let's figure out what's going to keep the markets going on. Where is it that you can track growth and where is it that you can see growth visibility? Let's welcome on board Ashwath Ram, the MD at Cummins India, joining in on the show right now. Ashwath, great to have you on the show. And firstly, festival greetings from all of us here at ET Now.
Yeah, happy Diwali to all of you and all the viewers as well.
Thank you. And it is turning out to be a happy Diwali, right? Your gross margins have expanded by nearly 500 basis points. What's aided this recovery? And you think these kind of levels are sustainable?
I think last quarter we had a perfect storm of good news. Commodities continued to trend downwards. We had a positive effect of mix. We sold lower numbers of low horsepower because of the pre-buy in the previous quarter. We were able to keep and manage some of our costs, and we were able to hold on to the price increases that we had done in the previous quarter. So all variables relating to margins were favorable. So that's why the margins were better. It's always our attempt to, keep up a higher level of margin. So it's probably not sustainable at this level, but certainly it is our endeavor to continuously keep improving our PBIT percentage year on year. We have a stated objective of growing revenue at roughly 2x of GDP and having 100 basis point improvement in margin year on year. And that's the kind of guideline we use to keep working on all aspects of profitability.
That right now there is a huge uptick in the private capex, and capacity utilization after a gap of many years has just kicked in. Do you think when you say that you will double at the growth of GDP, that could be a conservative number?
It could be conservative a little bit, but our growth is dependent on multiple markets around the world. So India could grow at even faster rates, but we are seeing slowdown in other parts of the world. And nearly 30% of our revenue comes from what we export. And so the variation there sometimes causes our growth rate to slow down a little bit. Also, we are in multiple market segments and not all market segments are growing at the same rate. And which is why a little more realistic kind of projection of what we can do. We have done better in the past, but if you say steady state, what is our aspiration to do? That's what it is.
Good to have you on board, and you are giving strong projections for the years ahead. But I want to know what the outlook is when it comes to exports, because that has been a bit of a stumbling block for the company. It's been weak. So are you seeing any signs of revival? Do you have any projections for where you'd like to see your export growth?
As a matter of fact, if you look at the last 2 or 3 years, exports have been steadily growing. And as of now, they have not declined very significantly. They're just plateauing out, and we are seeing softness in some of the global markets as of now. And it's probably caused by all the turmoil, geopolitical issues, Middle East crisis, oil prices, Ukraine. So it's a whole combination of things around the world, including China not coming back as fast. We do not expect that to decline significantly. We have seen previous cycles in exports where exports would drop even 30, 40, 50%. We don't see that kind of drop happening because we continue to introduce new products, and even if markets are slower, we are attempting to gain market share by launching new items into the export markets. But we do see some softness as of now, not able to clearly predict how long that softness will last, but we are working on all kinds of efforts to still show positive growth despite all the global softness.
In this entire energy transition, where a lot is changing, fossil fuel is becoming, is getting away, more efficiency has kicked in. Your mainstay of diesel engines, how will that get challenged? Is this something which is getting disrupted, and it's getting disrupted very fast?
It's certainly getting disrupted, and but it's not getting disrupted very fast. As of today, even for the global company, greater than 95% of our revenue comes from diesel and gas and similar kinds of fuels. We do see a transition. We have forecasted and we have committed to be a carbon neutral company by 2050, which is a destination we are calling Destination Zero. That's aligned to where the United States is going from a zero carbon emissions kind of norm. India has committed to go there by 2070. We think this is a transition which will happen in 3 phases. In the short-term phase, we're actually seeing the demand for diesel and natural gas grow, and there is consolidation happening globally, which actually helps a company like Cummins gain more share. In the medium term, we see multiple technologies playing, and Cummins has also invested in many of those technologies and is working on building up scale there. And in the long term, which we see 20-25 years from now, we think some of these technologies will gain traction and scale, and by then we will be ready with absolute best-in-class market products to win in that space as well.
Why does Cummins have a subsidiary in India?
Cummins was set up in 1962. It was already set up as a joint venture, a public listed company, and a US owned entity. Somewhere in the late 90s, the company wanted to invest in some new technologies, especially a lot of IP related development, etc., was going on. And at that time, the norms on IP protection, etc., were not favorable from a global perspective, and so it decided to set up independent companies which could protect some of that IP for the parent. And also there were spaces like in the automotive space where Cummins India was never present, and there the path to market was partners, big partners like the Tata Group, etc. And so the Tata Cummins joint venture was set up. So there's not one really strong reason for why other entities exist, but these are some of the reasons historically why it has happened, and we have been trying to stick to the norms, trying to maximize the total shareholder return on each of the entities that are there under my supervision.
Ashwath, great to have you in the show. Thank you so much for taking the time out and joining in today.